Welcome to TradeTheNBI.com. This is John's Reporters for the 9th of April, and that negative weakness, we had seen a nice little build up here. We were getting to the 38% right here on the Fibonacci or Fib level retrace program, and what that was representing is a point of resistance that we just didn't get over it or close above it, and then we started to see some early weakness develop, particularly as the cyan was shooting through here. So you had shorts activating within this. We never, and this was the problem I had pointed out before, we didn't have a reset of the steel. We needed to see a move of it going above the 13.5, which would have effectively rolled it over to coming up from underneath, and that didn't take place, which just left us within the same broader short run that we've been in and haven't changed from. We were just seeing some nice activity, and this is what happened with that blowing of the wad right here for institutional buyers when we had the massive up move that continued to propel, and then boom, of course they're going to claim it was this China blah blah blah, but the reality is that there's just some uncertainty with certain aspects of what's taking place and how to proceed forward, and we're at a valuation that some people feel comfortable taking gains and moving around. And you also have the issues with the technologies and whether or not they're going to face additional regulation. As much as it doesn't seem like an important factor, when you have Apple, Google, Facebook, and them make up such a huge portion of the NQ in particular, you see what it does. Now, the NQ is above the 23%, whereas the ES is below, so the ES becomes a very simple marker again, and it doesn't change, that 26.1650. It's a short below kind of configuration. Early on, we were talking about the shorts that were taking place on the 38% here as well, which was at the 67.50. Never even got to it from that open in the market, and now making a little bit lower shakeout. The shakeout's not in bad shape at this particular point. It's not horrific. What we had was a little bit of a potential closest thing you could refer to as overbought, where we were just starting to see some interesting algo activity here as we dipped with the orange as well, but that activity has just led to a little bit of softness at this particular point. The NQ, completely different. It's still above the 23% line, so that becomes a good pivot there. And this one makes it nice when you have these specific ranges, because you can play off them very specifically. Of course, the euro rebounding right at that bottom threshold of the zone here, and even got to the bottom. If you look at the major portion of those closes, all right about there, it's pretty much held consistent to that so far. And of course, the flight to quality, always. When fear rages, this is where people go. They put their money in treasuries temporarily to stave off any concern. Fade back in oil. I think we're just in a range. There's nothing real special about any of what we're seeing here. It's reaching an oversold position. I don't think we're at a point where it rebounds just yet. But again, you have the ABM green, which makes it very easy, and that's the DO slow. EBMDO program. And for gold, it's flatlined with positive influence, because you have to shake out in the positive territory. And again, with weakness in this particular category, you could see some benefit, with the failing of Bitcoin at this particular point. It'll be interesting to see. We just got the articles about Soros wanting to get involved in it, and that there may be a lot more activity in it now at these particular levels. Could spark some elevated interest. A lot of people didn't pay attention and got caught with the IRS. There were a few articles about that they didn't realize that you must still pay taxes regardless of whether or not you are trading something that you think is a secret coin. The IRS was tracking this all along, and some people are going to get hit with significant capital gains if they weren't prepared for it. They may have to liquidate additional items, and of course with this drawdown, that could be even more difficult. So Interestingly enough, though, if you really wanted to look at it from this 30-minute chart, we have rising gold. So we're going to be retesting the lows. It keeps making new lows each day, even if it rebounds off of them. That technically is not such a great thing, and just leaves it within the. I think I have a daily chart because it's a little hard because there's not that many days on the daily, but we've been following the downturn for quite some time. It hasn't changed. But it's relevant to know because we utilize this rising gold feature quite a bit in the 5K chart. So here it is, the day shrunken down from quite a range. We had the rising gold there, which called for the move towards the highs, which it did beautifully. And then I mentioned in the video the other day before Friday's video that we were in a short config that was looking for us to head lower based on what we were seeing from the breakdown and the shakeout and everything, and then that just escalated to the nth degree. That was a dramatic move lower on the extra $100 billion in tariffs supposedly that was going to be added into China, but it presented a similar effect right here. We ended up with a beautiful double bottom situation on rising shakeout, which was quite interesting, coming from the low levels right there. Made it right to the 50%, and then it just sort of flattened out from there. We stayed relatively okay with the shakeout. There wasn't much of a deep dip at all, and then we ended up with a secondary run, but this time we were at the 50% above point and positive shakeout, and that literally carried us right into the highs super fast, and then we made a bunch of additional ones. Let's start to increase this. It was later on that we ended up with some soft signals as well. It was quite an active day. So we had a little bit of a expectation for a failure zone on this one right here because we started to rise up. We were below the 50%. We popped right up to the 38% at that point, made the lower shakeout and steel crossing below cyan, which was the point to go ahead and expect this to go to the 0 point. And it stayed active for a while. I mean, dipped down, got close, didn't quite get there, but then finally it reached at the end of the dip here. And that produced a nice little ABM reset, which was a nice little cute buy right in between that zone that left for decent up move with when already had been a pretty good size short run. So it was nice to be short and then to turn around and be long as well. And then we ended up with a similar one right here. Again, we were right at the edge. We were still caught below the 50%. And then we ended up with a slight close above it, but it rolled over pretty quick and came right back to the lows. And then once those lows were hit, we were just in a straight down shakeout mode, and it just continued histograms below the 23%, didn't have any closes above the 23% going all the way through. This required really no activity until like the end of the day was the first time we saw any close above the 23%, and we were finally getting to positive shakeout at this particular point. And again, you can see there were some other rises of the brown suggesting we were going to continue. And this is where you're going to weigh in the benefit, when you're 2 points off of a low and you're getting this rising aspect underneath there. Is your expectation worth the risk? And so you're going to have to keep a relative relationship between the 23% at that particular point. It doesn't justify a broader range at that particular point because you've got a definite expectation that it's going to fade, and if it doesn't, then you know that it's time to be out of that config. So here was the last one that popped in, and it moved straight to the lows like almost instantly. And that's when a nice little turnaround came from the shakeout. You can see we went from red to white. And a little bit tougher because, again, while you even had the green above red, you had the orange dipping below. The steel's not anything particularly special. So is this super ideal? No. If I get these kinds of signals, I'm looking for very tight situation here where I'm not expecting more than maybe a zone or two. I was be looking for the 23%. At the 23%, I want to be checking, okay, what is my reading? Has anything changed? It was still looking pretty much consistent, but at that particular point, I was lifting my stop up pretty close to the break-even point at that particular thing, and we just kind of traded sideways at that particular point. And then we ended up with a little bit of a dip that took us right back to it with the reset of the shakeout, and then we went positive again and over the 50%, and so that was a much more comfortable, even though it traded just sideways for several bars, it ended up did make it to the peaks up here. Going forward, and then even with the additional rising, you were expecting to stay at the highs or move to new highs on a little bit of weakness. And then as we came across the day, it hadn't quite reached coming back there, and you end up the day minus 56, 2%. So the numbers seem larger, percentage-wise, relatively within the same. It was important to note right here, and sometimes people forget to look at this, when I got the positive extreme, my expectation when those start to fade is I'm usually looking for the first one to get that came after the original breakout to be retested, which is exactly what happened there. Hadn't quite reached the full one yet, which means that's definitely in play even going into the opening of the new day. So it's worth keeping in mind from an intraday standpoint. But all in all, some excellent ranges to take advantage of, and as long as you stick with some serious fundamentals, you know that your bias once you're below these key points, and we still have that 2616 right up here just listed, so that it's always in your focus, even in a shorter range chart. At that particular point that you want to be short biased. So in those particular cases, whenever I have weakness, I'm jumping on weakness, and if I'm trying to play along in that, I have to be a little bit more cautious and be prepared for things to turn around quickly. So that's just the mindset that you need to be flexible with. Wasn't afraid to take longs, but also not afraid to short into weak signals as well. So that's part of the nature of rolling with it as we go. It should be a good week of a lot of movement, because now that the funds have had their money in, we could see a lot more drawdowns. Even the president suggesting that the market could face some weakness as these trade battles, everyone who keeps talking about China having the upper hand on this one, I really think they're confused, but that's all right. Is it going to have a dramatic impact on what is typically happening in America? I don't really think so. It does mean that potential higher prices, though, are on the horizon. I think that's something everyone has to weigh. Regardless, there's still like another 60 plus days before they work these things out with the public comments and everything. So people get a little hyperbolic, and that's the beauty of news. It does create some movement, gives people excuses to do certain things and take advantage of it. But clearly it seems that even in some of the selling, we still end up with a significant amount of buying, pushing it back up. So we'll just keep playing with what we get from our readings, and I suggest keep sticking with the zones as we mark them, and we'll go from there. I'll keep putting up various charts on the Skype chat so that you can see when we're making these little buys and things like that, as well as the wonderful shorts. As always, trade well. We'll talk to you later.